All right, so next we need to do our balance sheet setup. Okay, so Chase Bank is already set up, obviously. And I'm just going to walk you through setting these up again, okay? Because I think at the end of the day, if they're set up, you understand how to just input them. Right now, you might not know which accounts to select and how to build one out yourself. But if you were to go back and look at this and you were to ask ChatGPT, you would kind of understand how to put everything in place. Or if you were seeing a QuickBooks that you're taking over, putting into transactions and things like that, you would kind of understand where everything falls based on this chart right here. So that's the whole point of this chart. It's not to teach you what all of these are, it's to kind of show you what might end up in these categories. So let's get set up on the balance sheet as well. We're going to start with their assets. Chase Bank is already set up here. So we have to do lease deposit. So let's come over here, hit new, type in lease deposit. Going to do other assets, and you'll see security deposits because a lease deposit essentially in most commercial real estate leases that you're going to sign is at least 1 month down as a security deposit when you sign the lease. So we're just going to do this and hit save. Get our new one set up next. Next one is going to be some of our fixed assets, equipment, furniture, and signage. So we can either just have them all as parent accounts. We don't have to really set them up as this full like waterfall. So let's just set them up as parent accounts and go from there. So the first one is equipment, fixed assets, machinery and equipment. Let's save. And you'll notice that I'm skipping over some of these items like starting value or purchased value. We'll see this in a second here. So let's do furniture. Again, fixed assets. You'll see fixed asset furniture. You'll see there's an original cost as of date. You can kind of ignore this for now because we're setting up a very fresh QuickBooks. This would be if you were doing a lot of retroactive bookkeeping, which obviously right now we will be doing because it's books from 2022 to 2023. But again, we're starting from as if it was fresh. You just got this set and we're going from the very beginning. So we don't have to worry about these specific boxes here. Hit save and new. We have one more asset, which is signage. And then let's just look at if we have anything that's related to signage, which I don't see. So I'm going to set this into furniture and fixtures just because to me, a sign is a fixture, whether it's on the wall, whether it's posted outside, it can be a fixture. So I'm going to leave it there. Alrighty, so now we have our liabilities. There's a Chase loan liability and sales tax payable. So let's look through here and just make sure we don't have a liability for sales tax because typically there will be. So what we can do is we can search real quick, sales. Does not look like there's a sales tax liability account, so let's hit new. Sales tax liability. I'm going to go into other current liabilities because this is something that you will typically pay on a monthly or quarterly basis. And if you look at the detail type, we have sales tax payable right here. Again, don't need an open to balance. As of right now, there's nothing owed. Save and new. And we have a Chase loan. So what we're going to do is we're going to say Chase loan. We're going to put this under long-term liabilities because long-term liabilities are anything that's due over more than a course of a year. In very basic terms, don't quote me on this. If you're a CPA, don't get mad at me. Long-term liabilities are anything that is paid off over the course of a year, and short-term are anything that needs to be paid within the next 12 months or shorter. And here you'll see notes payable, long-term liability, shareholder notes. Notes payable is a good way to put this because you're paying down a note over time. And then we can hit save. So let's take away the search so that we can see all of our accounts again. The last ones are equity, right? So this one probably is the one that's a little bit more confusing than the rest of them. All the names kind of are straightforward and make sense up until this point. But equity is the one that kind of, Doesn't have a straightforward explanation. So, what are contributions and distributions? Contributions are cash that the owner is putting into the business bank account to fund it. So, let's say you have to buy $20 worth of coffee beans, but your business bank account is zero, right? And you can't make money without buying those beans and selling the coffee. So, the owner has to put in $1,000 to start, let's say, right? So, we're going to say that's a contribution. What is a distribution? A distribution isn't just whenever you pay yourself, right? Because if the opposite of putting money in to the account is a contribution, the opposite would taking money out. But there's a clear distinction between a distribution of profits and what somebody pays themselves for being there, right? So you have to imagine from a business owner's perspective. And again, this is more of just holistically trying to explain what's going on. But you will, if you were running a cafe as a manager and you had to pay someone to be there for $20 an hour, then theoretically you're able to pay yourself a fair wage of $20 an hour at the same time. So you would want to categorize what you're worth in terms of the market, in terms of payroll wages paid here, and then any profits you take out outside of your regular paychecks, that's a distribution. Again, we'll go through this in more detail as we go through our examples. I really like being able to do transactional examples to be able to understand all of this. So let's go ahead and finish up setting these equity accounts, and this will be a parent and two children accounts. So we're going to set up a owner equity account. You're going to scroll down, you'll see equity, and here you can see partner contributions or distributions. And then you can hit save, new, contributions. We're going to set this to be save and new partner distributions. There we go. So now we have our, and how you'll see this actually organized is you have your assets, liabilities, equities. So your balance sheet comes first in the way that it organizes it, and then your income statement comes second. Income accounts, your cost of goods sold, and your expenses, and your other expense at the bottom. All right, so we got our chart of accounts set up. It was a little bit painful. We went through really quickly. We got a bunch of accounts set up, but how do we use these accounts, right? So let's get into that in the next chapter. We're going to start by setting up our first month's worth of transactions, doing the transactions, and really understanding where they end up on the income statement and the balance sheet. All right. Okay. So let's get on to the next chapter.